What are three things that you really need to avoid as a rental property investor? Number one, biting off more than you can chew. Rental property investing is pretty straightforward. It seems pretty easy, and in many cases that's the case, but there are a lot of ways for there to be more complicated aspects. Major rehabs, finding properties at auction, foreclosures, all of that stuff, it's fine, it's great. But if you're brand new as a rental property investor or you don't have a lot of experience yet, diving into all of those more complicated aspects can be a little risky. There are ways you can buy rent-ready rental properties, learn the basics first. Don't just go flying off the deep end and hoping your parachute's going to open. Number two, another thing to avoid as a rental property investor, not understanding where your profit's coming from. So many people just, again, it's a straightforward process. They assume buying a property is going to be profitable. In many cases, yeah, it will, but not in all. You need to understand where and how you're actually planning to profit. I have a whole video that breaks this down, linked below, so check it out, that dives into how to know where and how your property is going to profit. Hello, critical investing. It's for profit. Make sure you're actually going to get it. Third thing for rental property investors to make sure that they avoid: buying in a sketchy neighborhood in a declining market. Here's the issue. So many factors contribute to whether a rental property is successful or not. It can project the best numbers. The price might be great. Everything seems great. You do a great rehab. But if the market fundamentals are not there to support it, maybe the neighborhood attracts bad tenants. Maybe it's a declining market, so your property is going to constantly be losing value. Location, location, location. Not to be cliche, but it's an accurate cliche with real estate. Location actually does matter. So buying in a neighborhood that doesn't support upward motion, it supports downward motion, and that means loss. So if a sketchy neighborhood is actually gentrifying, maybe that might be okay. But if a sketchy neighborhood combined with not a lot of reason to believe that it's ever going to come out of that situation, huge mistake, because you're going to be paying for that in so many ways you can't even imagine. So a couple videos to help you on that third point. Number one, learn more about bad tenants. Check out my video, risk and mitigations for rental property investing. And if you want to learn more about exit strategy, what does that even mean, and how does where you buy contribute to that, then check out that video linked below. If all of this was helpful and in any way you think that knowing these three things to avoid as a rental property investor might actually help you in your rental property investing journey, throw me a thumbs up. Smash that thumbs up button, because we need information like this getting out. These are the things people don't tell you when you're trying to learn this stuff. And for more information on rental property investing, turnkey rental investing, hit that subscribe button and we'll give you all the information that we can come up with.